You were listening to chartingwealth.com for Friday the 20th of April, 2018. Our book is ready for pre-order. Charting Wealth, the book. Charting Your Way to Wealth is the name. It is available for pre-order. There are links in all the emails that are going out, plus at the website chartingwealth.com. And if you're checking us out on YouTube, we also have a link there. You can also purchase your trader journals. That's so you can keep up with what we do on a daily basis and accelerate your learning. All of it's available. Let's jump into these charts. Everything's down for the day. That is stocks, bonds, and gold. Let's jump into stocks first. We look at the S&P 500 on the weekly chart, and we have a green up candle. The biggest green up candle we've seen since the week ending the 16th of March. So again, we see that the derivative oscillator is continuing to lose downward momentum. Price percent oscillator looks like it's flat, maybe moving up a little bit. With this latest up movement, we had those three strong weeks, the week ending the 23rd of March, the last week in March, the 29th, and the first week in April, the week ending the 6th. Those were big, strong down weeks. The prior week to this one, ending the 13th, Friday the 13th of April, it was a doji pretty much. We had a week where everything sort of opened and closed where it started, but it was a green doji, meaning indecision tending up. Well, we saw that over the course of this last week. Again, still market, we have not crossed over on our weekly chart, so the long-term trend is still down. We see on the two-day chart, there we had a crossover going up back on the 16th. We're into the first day of the latest two-day candle. Not as strong an up movement as before. It's an open box red candle. Still some upward momentum there. Not a strong red down candle, but it still is some down movement. We'll see how that candle finishes up. We talked yesterday about seeing was there going to be a blocking on that 50-period moving average, and so far looks like it. If it shoots up through it tomorrow, then it may continue on up, but so far it has not made it above it, so that's interesting. Still above the two-day trend line, so we'll keep our eye on things. Again, if this rotates back over going down to parallel the down movement in the two-day chart, we might have a jumping in spot. Let's look at what's going on the 4-hour chart. We talked yesterday about potentially topping out, and it does appear for the short term that it's done that. It's sort of penetrated through the 200 period and now moved back down below it. Again, still above the two-day trend line, but again, heading down. Price percent oscillator heading down, still hasn't crossed over though. Derivative oscillators lost a lot of energy. So we'll keep our eye on the S&P 500 and see what the trend teaches us as we move along. Biggest down for the day is the Qs, the Nasdaq 100 down 0.92% for the day. We can see that the price percent oscillator has gone flat. Derivative oscillator losing downward momentum, even though we see that we are still in a strong up week so far. We can tell that we don't have a crossover yet, but that downward momentum has been paired off. And of course, as we look closer on the two-day chart, what do we see? Well, we see a red open box candle again, showing that down movement over the course of the first day of this latest two-day candle. We did switch over, which was a strong move when the prior two-day candle switched over from red to green. We saw the derivative oscillator and the price percent oscillator both flip at the same time. And of course, we've put in our blue vertical line, which means a two-day vertical crossover. So we'll continue to monitor those things. Let's look at the two-day chart. What do we see? Well, of course, it also sort of had bounded up over the prior day and a half, and then things petered off in the morning and then more in the afternoon. Don't have a crossover going down yet, but the derivative oscillator's lost energy. Price percent oscillator is also headed down. So again, keep our eyes on things. Remember, our weekly is still in a downtrend. All things being equal, the market tends to move in the direction of the largest chart, and that is our weekly. So we'll continue to keep an eye on things. Back to the weekly chart. Let's take a look at the 20-year bonds. We're going into our second week of down movement. We had some the prior week ending Friday the 13th. Stronger down week, however, we do have a wick on top. Again, strong down movements on the Heikin Ashi candlesticks. Don't have an upper wick on those solid red candles, just down wicks. So again, not as much down movement as we have seen in the past for those weeks ending the 23rd of February. We had, about 6 strong down weeks in a row, 4 really big ones. And we do see downward pressure. Derivative oscillator has lost some of its upward momentum. Price percent oscillator appears to be headed down toward the red signal line. We look at the 2-day chart. We see that it's getting closer to crossing over on the first day of the 2-day. Derivative oscillator has already flipped over going down. Price percent oscillator seems to be headed toward it. What do we see on our 4-hour chart? Well, never made that crossing over going up. We watched for that. What did it do? It just dropped off the deep end, so we did not have a jumping in point there. We like to try to find them. Sometimes they work, sometimes they don't. The best is when they don't get you in, as it did not here. Our charts did not fail us, and we've seen things move in the opposite direction. So we'll just continue to watch. And again, when the charts set up a play for us, they do. When they don't, then we don't waste our time and our virtual dollars. Let's next go to gold. The last chart we always look at, down 0.20% for the day. Still an up week for gold, a green open box candle with a wick on top. No wick on the bottom. Derivative oscillator continuing to lose downward momentum. Price percent oscillator, maybe it will make it through the week, crossing over, going up. Tried to for the last 5 weeks. We shall see if we have that crossover. Hasn't happened yet. What's going on the 2-day chart? It's losing some of that momentum. Derivative oscillator still gaining, but price percent oscillator not headed up at the same strong angle. Again, just the first day of the latest 2-day, looking more like a spinning top with some indecision. We'll see how the week wraps up. What's our 4-day chart telling us? Well, of course, it crossed over going down in the morning, and a little bit more down movement in the afternoon. Derivative oscillator also going down with the price percent oscillator. So we'll keep our eye on things. Folks, that's where we are as we end the day on Thursday, go into Friday, the last day of the week. We'll just keep our eyes on things and see how these charts continue to set up, and when they give us moves, when we can jump in and ride the trend. Please, again, if you're interested in our book and interested in our trader journals, check out the links we have at the website, and also those of you who subscribe to the daily market reviews, all of you should be doing so because we send them to you every day with all the latest training and information. You can do that for free at chartingwealth.com, and also subscribe to us on YouTube. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.